My name is Serge Hovnanian, and today we're going to talk about what it takes to successfully start a new business. First thing first, market research and due diligence. Prepare a very detailed market research and do your due diligence. Knowing your business concept and your vision is very, very important. Here you need to think about exactly why did you start your business? Why do you want to do this business? What is it that you want to accomplish with this business? Once you start the business down the road, let's say 1 year later, it's going to be very challenging to change your mind and step back because you have commitments, you have clients, contracts, you have employees. So keep that in mind. Next is market price and competition. Think about what the competition is charging. Do your research. How tough is the competition? How saturated the market is? What is the competition charging for a similar product or service? Do a SWOT analysis. Basically, note down your strengths, your weaknesses, your opportunities, and your threats. Think about all the risks that are surrounding your business. You may have product risk, financing risk. There are all kinds of risks that you may have. So for every type of risk that you can think of a mitigating strategy that you can use to avoid that risk. Location. Most of the time you need a very good location, maybe on a busy pedestrian street or near a subway station. In some cases it is not the case. So think about your desired location before you start. Assess the country and the city in which you are investing. Think about what the population is, the geography of the country, the international relations of the country with others, the political system. Think about the economy. The per capita income is a very important also thing to consider because this will give you an idea about what a person makes on average in this country per month or per year. Knowing this information will help you check whether the price you are charging to the client makes sense. Again, keep in mind that sometimes it can be misleading because you may have a big income gap in the population. National regulations. You'd better know what the regulations are for foreigners, let's say, investing in this country. Some foreigners may need some local partners to do business in this country. Foreigners may be forbidden to invest in some industries in the country. So do your research before you invest. Marketing strategy. Again, this is a very wide topic, and I'm just going to cover a very tiny bit of this. We're talking about online marketing here. Offline marketing can be very simple. It's just giving out flyers, for example, or putting a banner. For online marketing, let's say you have a translation company translating English to Armenian, and your company is in downtown Yerevan. You want people and clients to be able to find you. So you want to invest online in different channels to increase the visibility of your company online. Let's say you invest $200 per month. You have a budget for $200 to invest in Facebook, another $200 in LinkedIn, another $200 in Instagram, and let's say another $200 to increase the website visibility that you have on Google. Here you would have to invest in Google AdWords. So $200 in every channel. What you want to do after several months, you will need to check the website traffic for the traffic basically for every channel that you are investing in to see which one is doing the best. Let's say you find out that most of your clients are coming from Facebook. So what I suggest you do, you invest all your money, for example, in Facebook because other marketing channels are not performing as well. So this way, by investing more or allocating more of your funds to Facebook advertising will be more profitable for you and more efficient. Market penetration strategy. Here you need to think about how you want to penetrate the market. You may think about adjusting your price, lowering your price, for example, or maybe improving your product, or maybe increasing your distribution channels. Hiring, training, and labor law. Hiring can be sometimes often very challenging, so you need to use some online platforms to hire. LinkedIn is a very good one. Again, different countries can use different hiring platforms. Think about how you're going to train your new employee. Think about the labor laws in this country. Here I suggest you meet with an HR expert and let him or her explain to you all the regulations surrounding the labor law. What are your business costs? Now, your business costs are the easy part of the equation because it's easy to tell what your costs will be for the first year, for example. You know you're going to hire 2 employees, for example. You know you're going to hire an office, let's say, of a certain size in a certain location, so you know the cost of that. You know the cost of machinery, for example, you need to buy. So your costs are given. Once you do all that, think about the cost of living. The cost of living will be an important factor to consider when hiring employees because you need to give them a salary that is fair for them. Also, you will be also employed by the company and you also will have a salary, and you need to make sure that the salary will cover your cost of living and will be fair for you and your employees. Once you're done with all this, we can start with doing a financial model. So, what is the objective of the financial model? The financial model will basically help you predict how your business will perform on the long run, let's say 1 or 2 years, or maybe 3 years. When will it break even? And when will you start making profit? What tools do you need to do that? You need Microsoft Excel. What does the financial model do? Basically, the financial model, what it does is takes into account all your costs that you are incurring in the business, and it will predict your income stream. Basically, it will predict your revenue for a certain period of time. Here you need to make assumptions. Accordingly, you will basically deduct your costs from your revenue and take into consideration the tax you will have to pay and come up with your net profit after tax. So let's see what it looks like. This is what a financial model looks like. On the x-axis, on the x-axis you can see that this is covering 1 year, from January 1st until end of December. The curve in blue is your expected revenue over time. So your revenue is accumulating and it's adding up. The curve in orange is your cumulative cost. That is also accumulating as you progress into the business. If you look at the curve in gray, this is basically depicting what your net profit looks like. It's basically deducting your costs from your net revenue. So this is kind of the business model you want to avoid, because what it means that over time you will incur more and more losses. So this is not a profitable business model. A better business model looks like this. Over time, your cumulative revenue and your cumulative costs are increasing, but your cumulative revenue is increasing in a steeper way. In a way that if you look at this point here, you will see that this is where you break even. If you draw a next line down, you will see that your net profit curve is intersecting the x-axis at this point in time, and this is when you break even. So this is a nice business model where you break even, let's say in September, that is after 9 months of starting the business, and from that point and onwards to the right, you will be having some revenue, and again for the second year it will be better and better. In the next video we're gonna simulate some business model, And this business model that we are going to simulate using Excel, I hope can be very useful for you because you can apply it to any business you are doing. Thank you and stay tuned and see you next.